You hear about the stock market every day. It's a constant presence in our news cycles, a topic of discussion among friends, and a key indicator of economic health. Dow up, Nasdaq down. These phrases are thrown around casually, but what do they really mean? Sounds complicated? It's not. Let's break it down and demystify the world of stocks and shares. We'll explore the fundamental concepts in a way that's easy to understand. Think of the stock market as a giant supermarket, a bustling marketplace. But instead of groceries, you're buying tiny pieces of big companies. These pieces are called shares or stocks, and they represent a fraction of ownership. Like the ones that make your phone or sneakers, the everyday products you use and rely on. It's not just for Wall Street wizards, it's not some exclusive club. It's for everyone. Anyone can participate and potentially benefit from the growth of successful companies. Your money can work for you here, growing over time as the companies you invest in thrive. Why own a piece of a company? What's the point of owning a small fraction of a large business? Simple. When the company does well, your piece becomes more valuable. As their profits increase, so does the value of your investment. The stock market is where millions buy and sell these pieces every day, constantly adjusting prices based on supply and demand. It's the heartbeat of our economy, reflecting the overall health and performance of businesses. This isn't gambling, it's not about random chance. Investing is about doing your homework, researching companies, and understanding their potential, and believing in a company's future, its products, and its ability to grow and innovate. You're not just betting, you're not simply placing a wager. You're becoming a part owner, a shareholder, with a vested interest in the company's success. When the company wins, you win. Their success translates into financial gains for you. The stock market is a collection of exchanges, a network of marketplaces, giant auction houses where shares are bought and sold, facilitating the transfer of ownership between investors. It helps companies raise money to grow, expand their operations, and create new jobs, and gives you a chance to share in their success, receiving dividends or seeing your investment appreciate in value. Don't be intimidated by the jargon, it can seem overwhelming at first. At its core, it's a simple, powerful idea, connecting investors with companies to fuel growth. It's the engine of prosperity and opportunity, driving innovation and creating wealth. Anyone can be a part of it regardless of their background or financial status. It's about optimism, growth, and innovation, believing in the future and the power of human ingenuity. The stock market is the American dream in action, a platform for building wealth and achieving financial security. So, what's next? Let's dive into its history and understand how it evolved into what it is today. Now let's see where it all began, tracing its roots back to the early days of commerce and finance. Think the stock market is a recent invention, a product of the digital age? Nope. Think again. Let's rewind the clock all the way back to 1600s Amsterdam. Back then, the Dutch were the undisputed masters of global trade, dispatching their ships to the far corners of the world in search of precious spices, luxurious silks, and other valuable goods. But these voyages were incredibly risky, fraught with danger, and extremely expensive to undertake. No single merchant or investor wanted to risk their entire fortune on the success or failure of a single ship. The potential losses were simply too great. So these resourceful traders and entrepreneurs came up with a brilliant idea, a revolutionary concept that would change the world of finance forever. They decided to split the costs and the potential profits by inviting multiple people to invest in each voyage. They sold shares in each individual voyage, offering a piece of the action to anyone who was willing to take the risk. If the ship successfully returned to port, laden with valuable cargo, everyone who had invested in the voyage shared in the profits, proportional to their investment. This ingenious system effectively spread the risk, making it more palatable for investors, and crucially it allowed ordinary people, not just the wealthy elite, to participate in and profit from these global adventures. People gathered in bustling coffee houses and on the busy docks eager to buy and sell these shares, hoping to make a quick profit. This constant frenetic trading activity marked the true birth of the modern stock market as we know it. The first real stock exchange wasn't housed in a grand, imposing building. It was simply a bustling courtyard, an open-air market in the heart of Amsterdam. It was often chaotic and disorganized, but it democratized finance, allowing regular folks to invest and build wealth, not just the privileged few. This fundamental idea of shared ownership, shared risk, and shared reward remains the very foundation upon which today's global stock market is built. It all started with the courage of brave sailors embarking on perilous voyages and a clever, innovative way to finance those adventures and share in the potential riches. The concept spread like wildfire, transforming the world of finance with astonishing speed, democratizing finance centuries before the advent of smartphones and online trading platforms. The stock market's very roots are deeply intertwined with the spirit of adventure, innovation, and the pursuit of new opportunities. That bustling open-air market in Amsterdam wasn't just a marketplace, it was the world's very first stock exchange. And that's where the incredible story of the stock market all began. Booyah! Meet the Dutch East India Company, the VOC, founded in 1602, the world's first publicly traded company. The VOC sold stock to the public. Anyone could buy a share and become a part owner. Investors got a paper certificate, a share claiming a piece of future profits. Spices like nutmeg and cloves were worth more than gold, and people traded shares based on rumors of ships' fortunes. Trading happened in courtyards and coffee houses, no computers, just coins and paper. The VOC became the most valuable company ever, making early investors rich. Other countries copied the idea, launching their own trading companies and stock markets. The concept of buying and selling shares spread across Europe. The stock market model caught fire worldwide. It all started with ships, spices, and a simple piece of paper. The world would never be the same. So, what exactly is a share anyway? It's a fundamental concept in the world of finance, but it can seem a little abstract at first. Let's break it down in a way that's easy to understand. Imagine you and your friends decide to start a lemonade stand together. It's a classic entrepreneurial venture. To get started, you need $100 for supplies, so 10 people each put in $10. This initial investment is crucial to getting your business off the ground. To represent everyone's contribution, you issue 100 shares. Each person gets 10 shares, which represents 10% ownership of the lemonade stand. This ownership stake entitles them to a portion of the profits. If the stand makes $50 profit, you have a decision to make. You can reinvest the money back into the business to buy more supplies and expand, or you can pay it out to the shareholders as dividends. In this case, each share gets 50 cents. That's one key reason people buy shares: the potential to receive dividends, which is essentially a portion of the company's profits distributed to its shareholders. But there's even more to it than that. The potential for dividends is just the beginning. Imagine your lemonade stand becomes incredibly popular. Everyone loves your lemonade, and others want to invest in your growing business. Because of the high demand, you might be able to sell a share for $2 instead of the original $1. This increase in value is a key benefit of owning shares. The share price goes up as the business grows and becomes more successful. This reflects the increasing value of your ownership stake. This same principle applies to big companies, just on a much larger scale. Instead of a lemonade stand, think of global corporations. When you buy a share of a company, you own a small piece of everything the company has: its factories, its valuable patents, its brand recognition, and its potential for future profits. People buy shares hoping the company grows and becomes more profitable, or that it consistently pays out dividends to its shareholders. Ultimately, it's about betting on the company's future success and getting your piece of the pie as it grows. And don't worry, no PhD in finance is required to understand the basics. Shares are fundamentally simple. They represent ownership, the potential for profit, and a stake in the company's future success. That's the power and potential of owning a share. It's how you join the action and participate in the growth of businesses you believe in. Now that we understand what a share is, let's take a look at how the stock market itself grew up and evolved over time. The stock market idea spread from Amsterdam to London's coffee houses. Chaotic, wild, and unregulated. People traded shares in everything, even bizarre schemes. This led to bubbles, like the South Sea bubble, which crashed hard. After the crash, people realized they needed rules and order. Fast forward to America. In 1792, 24 brokers met under a buttonwood tree on Wall Street and signed the Buttonwood Agreement. This created a more organized, exclusive market, the start of the New York Stock Exchange, NYSE. The NYSE became the engine of American industrialization, funding railroads, factories, and oil companies. The market grew from a small club to a pillar of the global economy. It moved from chaotic coffee houses to a formal institution. The stock market fueled America's growth. It connected investors to big ideas. The NYSE became a symbol of trust and opportunity. The market matured, and so did the world. Next, let's meet the NYSE and NASDAQ. Today, two giants dominate the US stock market, the NYSE and NASDAQ. The NYSE, or Big Board, is famous for its bustling trading floor and blue-chip companies like Coca-Cola and ExxonMobil. It's a symbol of stability and prestige, using a blend of human interaction and modern tech. Being listed on the NYSE means you've made it to the big leagues. Then there's NASDAQ, the world's first electronic stock market, launched in 1971. No trading floor, just computers. It's home to tech giants like Apple, Microsoft, and Google. NASDAQ is all about innovation and growth. NYSE is the old guard. NASDAQ is the high-tech challenger. They compete for new companies, but together they form the heart of the US stock market. These exchanges are where fortunes are made and lost every day. The NYSE stands for tradition. NASDAQ stands for the future. Both are essential to the global economy. They're the arenas for the world's biggest companies. Every day the action is non-stop. The stock market is alive and evolving. It's where history meets innovation. And it's happening right now. For most of history, buying stocks was slow and expensive. You needed a broker, and fees were high. The average person was left out. Then the internet changed everything. Online brokerages like E-Trade let anyone buy and sell stocks from home. Commissions dropped from hundreds to just a few dollars or even zero. Information became free and accessible to everyone. The playing field was leveled. Smartphones made trading even easier. Apps like Robinhood let you invest instantly, anywhere. You can buy a single share or even a fraction of one. The digital revolution opened the market to a new generation. Investing is now easier, cheaper, and more accessible than ever. The stock market is truly for everyone. Ready to buy a share? Here's how it works today. First, open an account with an online brokerage. Think of it as your gateway to the market. It's as easy as opening a bank account. Fill out forms, provide ID, and link your bank. Transfer money in, say $500, and you're ready. Log in, search for a company like Nike or use its ticker symbol, NKE. See the current price, let's say $100 per share. Want 2 shares? Place a market order to buy at the best price. Click buy, and your order is sent electronically to the exchange. In a split second, your order matches with a seller and you own 2 shares. Selling works the same way, just place a sell order. The money appears in your account instantly. The modern market is fast, seamless, and global. Millions of buyers and sellers connect every day. You're now a part owner of a real company. Welcome to the game. From Dutch ships to trading apps, the stock market is the engine of our economy. It's how great ideas get the money to become reality. Railroads, cars, computers, and life-saving medicines all started here. When a company goes public, it raises millions to grow, hire, and innovate. This creates jobs and drives economic growth. The stock market is a giant report card for the economy. Indexes like the Dow and S&P 500 reflect our collective hopes and fears. Rising markets mean optimism. Falling markets mean worry. It's a barometer of economic health. For you, it's a powerful tool to build wealth over time. By investing, you let your money grow with the world's best companies. It's how you save for retirement, education, or financial freedom. The stock market is about ambition.